Hey guys, welcome back to another video. My name is Sam. This is a channel where we talk about personal finance, we talk about budgeting, we talk about saving money and gift cards. Today I want to talk about my stock trading experience for 2020. So for myself, I'm pretty new to the stock market. I've always just, in terms of buying stocks, I've never really done it on my own. I always had an account. But at the same time, the power of attorney to the account was my mom, and she always did most of my trading. And anything I wanted to buy, it had to be vetted through her. So if I wanted to buy, let's say, Facebook or Amazon, she had to be okay before I can buy it. And if I want to buy something a little bit more risky, then I can still buy it, but at the same time, she might sell it before I lose too much money. So I never really had control of my own trading account until this year, actually. So, and this was a good year to get yourself into the stock market, just because it's always a good time to get yourself into the stock market. Always a good time to invest. As there's a quote saying that the eighth world wonder is compound interest. So the sooner you invest, the more your money will work for you, and the more interest you'll gain, and the more your interest can work on the interest, and so forth, on compounding interest. So with that said, I just want to show you my experience. Now, going back to as an employee of CIBC, we had this employee benefit where we can buy shares of CIBC. CIBC is one of the big five banks in Canada. And because I had a mortgage, I had to close that account. I had to close out all of my open loans. So we had to close that loan, but if I had the shares, I had to move them into a margin account. So you can see here in April. We transferred, you can see in line 13 here, we transferred CM, that's a symbol of CIBC stocks, into the margin account. We also transferred some more here. I believe we got some dividends, we got some DRIP, and then we had to transfer a little bit more. So all in all, we transferred about, I believe the balance was about 50,000 or so. And it's because it was higher, but because of the pandemic, there was a big hit back in March, and a lot of the banks didn't recover right away. So this is a margin account, and with a margin account, you can borrow money, you can overtrade. There's buying power. There's usually 3-to-1 in terms of what you can buy, depending on the stocks that you can buy. But for the most part, if you have $1,000, you can spend up to $3,000. Okay, that's kind of how it works. Now, I totally forgot about this. I've been trading, just looking at my TFSA, looking at my portfolios of my TFSA, my RSP in the US. The equivalent would be the Roth IRA and the 401k. So I've been looking at those for a long time, but I forgot that I had margin. And the first time I realized this, it was back in June. So that's when I first made my first trade, buying CWH. This is Camping World. And I believe I bought like 100 shares. So that's when it first started. So you can see June, I also bought Germ. Germ is a kind of like a vaccine ETF. So just trying to get some exposure in that. And then in July, we can see that I did a lot more buying and selling. So just filtering on all the buys. In July, we had 21 buys. In August, we had 9 buys. September, 10, and so forth. Definitely a lot more trading activity ever since. And just want to show you all of my realized gains. Now, realized gains just means that I bought and I sold and I'm out of the position. So the money is mine. So this is pre-tax money. So let's have a quick look. So realized trades, going into here. Now, this is just in alphabetical order, okay? So bear with me, it's not in timestamped order. So back in July, I bought 15 shares of AbbVie. AbbVie is a kind of like a healthcare company, right? A pharmaceutical company. I bought 15 shares. I mainly bought it because they pay really, really good dividend. And ever since I bought it, it went down. But at the same time, I wanted to get out of the position. So I took a little bit of a loss, kept it for about 2 months, lost about $50. Not bad, considering I got some dividend out of that and I wanted to invest in something else. Next is AMD. AMD was a booming stock in 2020. It went from $25 to $50 right away, and it's been climbing ever since. Now it's trading at about $92. So I bought it. You can definitely see I bought it at $82 and also $92. This one here, I did not mean to sell this at $76. I actually got margin called. Margin call just means that I was overexposed, the market went down, and I had to sell some of my stocks to cover the margin I was borrowing. So I had to sell about $8,000 worth of stock just to cover the amount that I was borrowing. So all in all, we lost some money here. So right off the bat, not very good. Okay, we lost $1,000. Next, this is early July. This is when I was doing a little bit of trading, and we were shorting Cineplex. And if you remember Cineplex, they tried to make a deal with Cineworld. This is a European company, and it fell through just because the pandemic came and they didn't see the value in it. It was the deal was a little overvalued for the time that it is now with the pandemic going on. So with my thinking, I believe that Cineplex is not gonna do well in the pandemic, right? You can't have a movie theater. You can't have people congregating, watching a movie. You can't have people eating with no mask on in a theater and play a movie. At the same time, movies aren't being produced. You have Tenet that got delayed and finally got released in, I believe it was August. And you have Mulan, never got released. It got released on Disney Plus. You have all these big name movies that just never got released. I believe Top Gun 2 didn't get released. You have that Marvel movie. You have the Wonder Woman 2. Again, all in all, what I'm trying to say is that you have a lot of big blockbuster movies that aren't releasing the movies because they're not going to make money. And at the same time, if they're not releasing movies, then people aren't going to go. And at the same time, you have local government saying that you got to close down theaters. So all in all, I'm trying to short this. You can see that I shorted it 820 to 805, made some money here, made some money here, made some money here. And funny enough, I bought it. I bought it when it was pretty low, and then I sold it when it climbed up to 791. All in all, I stopped trading Cineplex just because as time went on, it was the city was starting to reopen, right? Vaccines was coming around, so I didn't want to trade this one anymore. So all in all, taking home $380 here. Cargojet. Cargojet is something that I'm really, really bullish on. Cargojet is a Canadian company. They make, they fly, goods. They fly like big fleets of cargo on planes. They're the biggest company in Canada that does this. So they pretty much, in a nutshell, they ship like your Amazon packages and whatever, and all this. They ship just fleets of shipment through using jets all throughout the country, all throughout North America. And one of the big customers is Amazon. So Amazon has been going up, has been rapidly going up ever since the pandemic. Everyone's just shopping from home. So this is one that has been booming, and this is one that has been just one of those companies that has been steadily increasing over time. Ticker symbol CJT on the TSX, and we bought it in July, and we held it for a month. all in all, although for a month, we made $77. Okay, in the end, I want to get out of it just because I want to put my stock somewhere else. Now, CIBC. CIBC is the bank that I work for. So full disclosure there, I don't have any inside information. I'm not a pro trader as well. But at the same time, I'm pretty bullish on CIBC. And actually on all the banks. And as you remember from the pandemic, since March 23rd was the lowest of the stock market. And since then, the stocks that bounce back right away are your quote unquote stay-at-home stocks. So your Zoom, your Facebook, your Amazon, your Peloton, right? So all of those stocks, your stay-at-home stocks just boomed. Your Wayfair and whatnot, all your shopping online kind of stocks. Then there's a whole bunch of stocks that went down. So your airlines, your cruise lines, your casinos, your goods and your brick and mortar, your department stores, all that stuff down the toilet, right? So that one, but there's a few that that it's safe, but there's this mid tier that hasn't come back yet, and it's that once things get better, they're gonna bounce back. And there's two in that category for sure. One is the financial sector, and the other one is the food industry. So the financial sector, back in 2008, they were hit pretty hard, and back then it was their fault, right? They were selling mortgage-backed securities, but this time around, this pandemic was not their fault. It was the fault of, this was a sort of a natural disaster kind of deal, right? So, and it was a virus. It's not something that the bank created. They didn't create a product that was super risky back then. So I believe that banks, they'll bounce back. And sure, they may take some losses on. There's a lot of provisions on small businesses closing, a lot of bankruptcies, a lot of people can't afford their mortgages. But at the same time, banks are trying to do their best. They're trying to offer these PPP loans, and they're trying to offer these delayed mortgages. So they're trying to help out as well. So all in all, I believe the bank is going to come back. Right now, we're trading this one. I'm buying it anything under $94, right? So I buy it at 90, selling at 94, buying at 92.50, selling at 94. All in all, we only did it a couple times, making a little under $300. Cirrus Logic. Cirrus Logic, if you follow, one of the people I follow is Jeremy on YouTube. He has a channel called Financial Education. I'll link it down below. And Cirrus Logic is something I heard from him, and this is a stock that ticker symbol CRUS, and they make pretty much, they're a microchip company. Then they make the sound portion of the microchip for iPhones. So that Apple is their biggest customer, and for the most part, they've been doing really well just because sales of iPhone has been off the charts. It's kind of funny because during the pandemic, you would think that people don't have the money, people don't have jobs, and they aren't shopping for iPhones. But at the same time, there's a rationale for buying more iPads, buying more computer gear, because you're staying at home, and there's people going to school, doing school at home, working from home. So they need the iPad, they need the computers, maybe the iPhones, the tablets. So all in all, this has been going up, and bought it at $65, sold it at $80, got myself a profit of $740. So this is the biggest one yet, right? You look at all these other ones, $740 is the biggest one yet. Been doing a lot of trading. I think this is the first stock I bought, Camping World. Camping World, I love the CEO. His name is Marcus Lemonis, and ticker symbol CWH. This stock has been on fire, let me tell you. And back in the pandemic, back in March 23rd, this stock was about $3. Now it's trading around 30, and that's a 10 burger right there. They sell camping, they're a brick and mortar, they sell camping gear, from your tents, your fishing, they sell those outdoor goods. But what they're really, really known for in the market is they sell and rent RVs. And from the pandemic, no one wants to go on a plane. No one wants to travel. First of all, you cannot travel. And secondly, even if you want to travel internet, like within the country, it's a little scary. So a lot of people don't want to travel. But at the same time, they have all this time. They have vacations, or maybe they just got laid off. They don't have jobs, but they still want to do some stuff with their time. So RV sales is off the roof this year, this summer. So bought into that. Did a few trades, did some buy and sells. All in all, even sold some call options. So we have a total of 3,600. So 3,600 in Camping World trades. So pretty good. I'm still holding 500 shares, still doing some cover calls. And next we have Dropbox. Dropbox is another stock that Financial Education recommended, and bought, I believe this is 200 shares, and I just sold a cover call, making $12. Okay, just making some cash, seeing where it goes. Facebook, another stock that took off. Its ticker symbol FB. We all know Facebook. Mark Zuckerberg, and we all have Facebook. We all have WhatsApp. We all have Instagram. Facebook Messenger. It's all there. We all know it. And stock has been booming ever since. And bought some at 260, sold some at 291. So making a profit of 311. Netflix, there was a big drop back in July, and it was because people were scared that they didn't have enough content. But Netflix went up really quick just because, you're at home. What are you going to do? You're going to watch TV, and all in all, you're gonna subscribe to a Netflix account. And they did have a big library, but people were afraid that their stock, their production company was gonna slow down. So when it dropped, I bought it at 500, sold it at 535. Only had 7 shares, but in total making $233. Not bad. Palantir is a stock that you'll notice it if you see it on Wall Street Bets. It's all over the place. It went up. It just skyrocketed this year. This is a analytics company for the government, sort of like your Tableau, sort of like a Tableau kind of thing, but mainly used by the government. And one of the biggest customers is ICE detention center, right? So then it's in the end it's contracted out by the government. They're making pretty good money on that. This has been a hot stock. Bought this at $19. It's been going up ever since. Hit 30, but came back down to around 24, and in the end sold some options on it. Okay, so sold some cover calls, making 180. Not bad. Sold some cover calls on $35. Okay, so December 4th, right, is the expiry date. Strike price 35, never hit. Got to keep my 180. Not bad. Sold another. So again, later in the year, I started selling some cover calls. This is Rocket Mortgage. So Rocket Mortgage is just another or Rocket company, and one of the subsidiaries is Rocket Mortgage, and they are a mortgage company, and the housing market has been booming. Everyone wants to buy a house. Everyone needs more room. The condo market has been slammed, and anything that is 500 to 600 square feet or even under, that's not enough room. Okay, you just have a 1-bedroom and you don't have room for a desk. You need people are trying to move to 2-bedroom apartments, 3-bedroom apartments. They're trying to move to a house, and they just need more room. They need a desk. So this one, I believe it's going up. So wrote some cover calls. This one will expire next week. If it does, then I will make my $80. Shopify has been one of my favorite stocks this year. Wanted to buy it. I forgot I had the margin room. It was under $500 at one point in April, and I forgot that I had the margin room. Such a big FOMO, such a big regret. But all in all, got into it at 1,300, got out of it at 1,400. For the most part, it's been capped at 1,400, so made myself $500 there. not too bad. The next one, Tesla. Oh boy, this one has been a roller coaster. So for myself, I'm a big Tesla product fan. I don't have the car, but I love the car. It's great. It's sleek, it's techy, it's what everybody wants. It's the future. It's the future of cars. But the stock, right? Elon Musk, the evaluation does not even get there, right? It doesn't even make sense. And at the same time, can they sell these many cars? Maybe they can, maybe they can't. We'll see. With the pandemic days, there was definitely a slowdown. People didn't have the money. Factories were closed down. Elon Musk even opened a factory against the law, against government rules, right? And they didn't even get punished. So all in all, bought one stock, super, pretty high price stock. It didn't have that much money, so bought it at $14.82, and this is when they announced they're doing a stock split. Okay, so bought that there, and then bought that in April 12th, sold that within the month, sold that for $2,200, made $713. Okay, once it split, it was trading around your 475-ish. Bought some more. Okay, I bought 15 shares right here, and ever since that, it went down. It went to the low 400s, even to the 300s. And you know what? Once it came back up, I just wanted out. There's a little bit of a roller coaster. I wanted out. So this is when, back in November. So I bought this back in late August, early September, but in late November, it was then added to the S&P. And when it gets added to the S&P, a lot of the hedge fund companies, everybody who holds the S&P, the SPY, the VIX, the SPY stock, right? So all the ETFs, they have to buy Tesla, and that's why it went up. So they have the obligation to buy Tesla, and it went up. It's currently trading at almost $600, so I definitely missed out, but I just took my profit and I'm happy with that. So all in all, trading Tesla, making $1,193. And the last one is Upwork. So again, if you know Jeremy from Financial Education, he talks about Upwork a lot. It's one of his favorite stocks. And for this one, sold some cover calls on it. It expires in 2 weeks, December 18, 2020. The strike price of 40, and if it doesn't hit, then I get a premium of $126. So in the end, I still get my $126, and adding it all up, my trading performance $6,618 for the year. So not too shabby, right? Year to date, and the year's not even over yet. I might lose some money, but we'll see about that. And moving over to just having a look at dividends and interest. Dividends and interest, I'm losing money here just because I'm on margin. I'm almost fully tapped on margin. If you have a look, this is my margin interest on a monthly basis. You can see I'm borrowing almost 100k, over 100k, and I'm being tapped out here. I'm making some dividends on Avi, some on CIBC and so forth, but it doesn't even make up for it, and I'm just here for the gains. So all in all, making some pretty good money. Hey guys, thank you for watching. Hope you guys found this entertaining. Of course, if you like this video, please like and subscribe for more content. See you guys in the next one. Take care. Bye.